Kejaksaan Agung telah menetapkan sebanyak 16 tersangka yang terseret dalam kasus dugaan korupsi timah.
Kasus korupsi tata niaga komoditas timah diduga menjadi kasus korupsi terbesar. MBG dan juga SG yang merupakan pengusaha tambang pemirsa di Bangka Belitung ini membentuk perusahaan boneka
hingga berdampak kerugian negara sebesar 300 triliun rupiah.
Timah Tbk adalah perusahaan produsen dan eksportir logam timah yang didirikan sejak 2 Agustus 1976 dan berdomisili di Pangkal Pinang, Bangka Belitung.
Good morning, Ma'am Alfia and everyone. We, Group 12, are pleased to present our analysis of PT Timah Tbk. Before we diving into the details, let us first introduce the table of content, which outlines the topic we will discuss today. There is the case, theoretical framework, application of the theoretical framework, which includes reporting quality analysis, quality of financial statement, common size analysis, ratio analysis, and the last one, the risk assessment. And the fourth one, the key takeaways. Now let's begin with the first section, the case. Today we will discuss the case of PT Timah Tbk, a leading tin mining company in Indonesia, which faced a major ethical dilemma. While pursuing profit maximization, the company was involved in a corruption case that led the financial statement manipulation and significant environmental damage, estimated at 271 trillion rupiah. Our report focused on analyzing the ethical breaches in PT Timah Tbk's financial practices and the environmental impact of its failure to meet corporate social responsibility or CSR obligation. Alright, let's dive into the key problems surrounding PT Timah Tbk's financial practices. To make it clear, we've broken down the core issues into specific points for easier understanding. So, the first major concern is manipulation of financial report. PT Timah Tbk was found manipulating its financial report, violating international accounting standard and professional ethic. Key anomalies in the 2022 until 2023 financial reports suggest effort to hide losses and portray financial stability. This manipulation includes inflated revenues and delay expense recognition, undermining earnings quality and misleading stakeholders. A notable red flag is the significant gap between the income statement and cash flow, indicating unsustainable revenue sources. The second measure is violation of the Accountant Code of Ethics. PT Timah Tbk's manipulation of financial report violated key accounting ethics principles, including integrity, transparency, and professional responsibility. The company failed to reflect its true economic condition, withheld critical information, and neglect its duty to provide accurate reports to stakeholders, undermining trust and accountability. Okay, let's move on to another major issues. There is neglect of corporate social responsibility or CSR. PT Timah Tbk failure to uphold CSR, especially in environmental management, has caused severe ecological damage. Poorly managed mining activity have led to biodiversity loss, water pollution, and land degradation, impacting local communities' ability to utilize natural resources. Experts estimate the total environmental and economic losses at 271 trillion rupiah, with recovery costs significantly high due to the need for ecosystem restoration. Alright, let's move to our final point, economic losses and environmental recovery cost. PT Timah Tbk's mining operation have caused severe environmental damage, leading to significant economical impact at both local and national level. Their mining operation caused economic losses, distributing tourism and fishing sector due to pollution. Environmental recovery costs, including land rehabilitation, water restoration, and air quality improvement, are substantial, highlighting the need for sustainability practice.
Next, we will discuss about the theoretical framework. What is the theory and tools that we use to analyze the financial conditions, financial statements, and other things related to PT Antam? Financial reporting quality is a benchmark for assessing how well a company's financial information aligns with accounting standards. The standards differ globally, such as IFRS used in Asia and Europe, or GAAP in the United States, or usually known as US GAAP. The goal is to produce reliable, high-quality reports that aid decision-making by ensuring accuracy, understandability, and freedom from material errors. Let's look at this diagram here. The spectrum illustrates level of financial reporting quality, ranging from GAAP-compliant reports with GAAP but biased choice, within GAAP but with earnings management, to fraudulent or non-compliant accounting. Let's dive into what defines the quality of financial statements across three core aspects: earnings, cash flow, and balance sheet. Earnings quality. This reflects consistent and non-manipulative earnings that can predict future performance. And then the next one is cash flow quality. Sustainable cash flow is vital, supporting expenses, investments, and debt obligations with minimal volatility. And then the last one is the balance sheet quality. A strong balance sheet reflects completeness and proper allocation of resources, ensuring a long-term financial health. Next one is financial analysis process. This financial analysis tools right here, common size analysis, trend analysis, and ratio analysis offer valuable insights into a company's performance, helping stakeholders make informed decisions. Each method complements the others to provide a comprehensive financial picture. As of the first one, common size analysis. Vertical analysis. In the income statement, each line item such as revenue, cost of goods sold, and operating expense is expressed as a big percentage of total sales or revenue. Similarly, in the balance sheet, line items like assets, liabilities, and equity are expressed as a percentage of total assets. The next one is horizontal analysis. This compares financial statement line items over multiple periods to show the percentage change from one period to another, highlighting growth rates and performance trends. Next one is trend analysis. This method uses a base year with an index of 100 to track increases or decreases in financial metrics over subsequent years. It provides a clear picture of the company's financial trends over time. And then the last one here, we have ratio analysis. Starting with liquidity ratio. It measures a company's ability to meet short-term debt using its current assets. And then the next one is activity ratio. Assesses how efficiently a company uses its asset to generate revenue or manage operations. And then the third one, we have profitability ratio. It evaluates the company's ability to generate profit relative to revenue, assets, or equity. And then the fourth one, we have solvency ratio. Measures the ability to meet long-term debt obligations and maintain financial stability. The last one, we have valuation ratio, which analyzes the company's market value relative to financial metrics like earnings, sales, or book value. Sustainability is increasingly essential for companies guided by standards like the Global Reporting Initiative, or known as GRI. The standards span foundation principles, disclosures, and approaches addressing economic, environmental, and social impacts. Such guidelines help organizations ensure long-term viability while balancing their environmental and social responsibilities. Risk assessment is critical for identifying and mitigating issues that could disrupt key business objectives. In this case, is COSO. These frameworks help organizations like PT Timah enhance compliance, governance, and operational efficiency. COSO focuses on operational effectiveness, reporting reliability, and legal compliance. Its components include control environment, risk assessment, control activities, communication, and monitoring.
We will discuss the application of the theoretical framework at PT Timah. These discussions cover several important aspects. The first one is financial reporting quality. The second one is the financial statement quality, which we will review from three main perspectives. Is it earning quality, balance sheet quality, and cash flow quality. And also we will discuss about financial analysis process, which includes common size analysis, trend analysis, and ratio analysis. And also we will discuss about sustainability report and risk assessment. The quality of Timah Tbk's financial reporting is excellent and fully compliant with IFRS standard. This is also evidence-based audited financial statement, which are accurate and reliable. Furthermore, Timah Tbk places significant importance on implementing IFRS standard when making changes to its financial records. For example, in 2021, the interest payment account in the cash flow statement was classified under cash flow from financing activity. However, from 2022 onwards, the company reclassified this account under the cash flow from operating activity. This is allowed under IFRS, specifically IAS 7, which governs the cash flow statement. In IAS 7, paragraph 33 states that interest payment can be classified as part of operating activity because the interest is associated with the cost of obtaining loans and is considered part of the entity's operational expenses. Alternatively, interest payment can also be classified as part of financing activity as they are related to the cost of securing external financing. The choice of classification depends on the entity's accounting policy, but it must be applied consistently to ensure the comparability of financial statement from one period to the next period. Based on the 5 levels of financial statement quality, the quality of PT Timah Tbk's 2023 financial statement can be classified at level 1, which is described as GAAP, decision useful, low earning quality. This is because the financial statement comply with accounting standards, specifically IFRS. However, the earning quality is still considered low due to the low quality of the earning ratio and non-recurring earnings in this period. To evaluate the quality of PT Timah financial statement, we will examine 3 main components: is it earning quality, balance sheet quality, and cash flow quality. These elements are essential for understanding the financial strength and weaknesses in PT Timah financial disclosure. The quality of earning ratio in 2021 was 3.09, indicating a good quality. In 2022, it slightly declined to 2.83 but still reflected good quality. However, it dropped drastically to minus 1.51 in 2023, which indicating low quality due to PT Timah experience loss year. Based on profit or loss statement and quality of earning ratio, several key findings have been identified. There is a significant decrease in quality of earning ratio in 2023 because PT Timah experienced loss year. PT Timah experienced a decrease in net income since 2021, and the highest decrease is in 2023, which is approximately 143%. The significant decrease caused by a decrease in sales and increased price in cost of goods sold. So, the decline in sales is not comparable to the decline in the price of the tin raw materials. The finance costs look constant in 2023, even though some of the debt has been paid off in 2022. This is because of PT Timah added a fairly large short-term debt from the bank, so the finance cost did not decrease significantly in 2023. And the last one, the losses experienced in 2023 can be partially compensated by gain from asset revaluation, which tend to increase from 2021, indicating an increase in the market value of the asset owned. Asset quality is seen from 3 things: is it working capital, asset performance, and capital structure. Working capital and capital structure show good value, while asset performance is moderate. Balance sheet analysis shows several key changes. From current asset, trade receivable decreased in 2022 because there is a decrease in income taxes refund and increase in payment of income taxes. From non-current asset, there is a slightly fluctuation between 2021 until 2023 that is not really materials. Okay, next. From current liability, it increased significantly due to additional short-term bank loans of 237%. From non-current liability, it decreased by 24% due to the repayment of bonds and suku ijarah. And the last one is from equity, it decreased by 11%, mainly due to losses in 2023. Based on cash flow statement, several key findings have been identified. From cash flow from operating activities, there is a decrease since 2021 and it will be really significant in 2023. It is caused by loss in the year and also changes in classification of payment interest, which was previously classified in the financing section. From cash flow from investing activities, there is a decrease in 2023 because of addition from insurance claim and the investment amount in the year that is not as big as in 2022. And from cash flow from financing activities, there is a significant increase in 2023 of 111%, even becoming a positive value due to additional funding from short-term bank debt. Overall, cash flow quality is good in 2022 and moderate in 2023 because it still has a positive operating cash flow that can cover the operational expenses. However, the quality decreased due to loss in 2023, so some of the financing costs cannot be covered by PT Timah cash flow.
Let's move on to our next topic, common size analysis. Include vertical analysis and horizontal analysis. Vertical analysis focus on the proportion of revenue allocated to expense or the distribution of assets and liabilities, providing insight into the company's cost structure and financial health. Horizontal analysis, on the other hand, looks at changes in financial statement item over multiple periods, highlighting percentage changes, trends, and growth rate. Let's take a closer look at how this analysis applies to PT Timah Tbk. Let's begin with the vertical and horizontal analysis of the income statement. As shown in the table beside me, the green highlight represents vertical analysis, while the blue highlight represents calculation for horizontal analysis. Based on this analysis, there is several key findings. The first one is sharp decline in sales in 2023. Revenue dropped significantly, consistent with trends across the commodity sector, including tin mining companies like PT Tbk. There is three big factors contributing to the decline. A 35% decrease in tin prices caused by oversupplying in the global market. The second one is the Russia and Ukraine war, distributing export and import activities and reducing sales volume. And the last one is weakened global demand and increased tin inventories at the London Metal Exchange. Okay, we move to the second key findings, anomalous increase in COGS in 2023. COGS rose to 75% of revenue, driven by fluctuating energy prices and high global logistic costs. The mining sector relies on energy, leading to increased costs despite declining tin prices. The third one is drastic drop in gross profit margin. Gross profit margin fell from 20% in 2022 to 5.5% in 2023. Overall, PT Timah profitability in 2023 lagged behind industry peers like PT Tbk, affected by global economic conditions and rising costs from expansion effort. This analysis highlights PT Timah's challenges in managing costs and sustaining profitability amid external pressures. Okay, so we have to move on to the next section. We're gonna discuss vertical and horizontal analysis of the balance sheets. As we see, this table divided into current and non-current asset, current and non-current liabilities, and equity. Based on this analysis, here are the key findings. The first one, liquidity issues. A significant decline in cash and trade receivables suggests liquidity challenges, likely due to lower revenue, increased operational costs, or reduced collection of receivable. The second one is stable long-term investment. Non-current assets remain stable, indicating no major changes in the company's long-term financial strategy. But the increase in deferred tax assets suggests potential financial recovery strategies, possibly from tax deferral or benefit from government. The third one is liability management. A decrease in supply liability indicates reduced short-term obligation, possibly from lower procurement needs or improved cash flow management. The fourth one is challenges in short-term assets. The overall decline in current assets highlight difficulties in short-term liquidity, which could affect the company's ability to fund daily operation. The fifth one, declining equity. Total equity dropped between 2022 and 2023, reflecting financial struggles caused by reduced profitability or increased liability. This signal weakened equity position, potentially driven by operational losses or external market challenges. This analysis highlights PT Timah Tbk mixed performance in asset management and financial stability. Okay, so let's proceed to the next section. In the next section, there is vertical and horizontal analysis on cash flow. This analysis divided into three sections: operating activities, investing activities, and financing activities. The first one, analysis on cash flow from operating activities. Based on analysis, customer receipts decreased by 37% in 2023 due to declining sales and lower tin prices. Raw material purchase also fell by 24% through not proportionally to the drop in sales, as COGS was influenced by other factors. Additionally, interest payment rose by 14% due to increased debt level, and overall cash flow from operating activities saw a sharp decline of 77% to 2023, driven primarily by a net loss in 2023. So the second one, analysis of cash flow from investing activities. Based on analysis in 2023, fixed asset condition increased by 595 billion rupiah to support mining operation and downstream program, aimed to enhancing production capacity. Investment properties also rose by 75 billion rupiah to support capacity expansion and downstream effort. Despite the rise in fixed asset, cash flow from investing activity improved due to reduced fixed asset additions and income from asset sales and insurance claims. The third one is analysis of cash flow from financing activities. Based on analysis, short-term debt grew by 50%, leading to a 56.34% increase in current liabilities, primarily from bank borrowings. In 2022, negative cash flow from financing activities was reduced due to substantial debt repayment, supported by high profit in constant 2023, so positive cash flow from financing activities, driven by new short-term borrowings that offset the previous year debt repayment. We can conclude that in 2023, cash flow changes were driven by asset sales and increased short-term debt, boosting net cash and cash equivalent. Despite these changes, the percentage change in cash and cash equivalent remains stable at 158% for both 2020 and 2023.
Next, let's discuss about trend analysis on income statement. In analyzing the trend throughout the year, we use 2021 here as our basis year with index amounted 100 as a basic index. As illustrated in the chart right here, we observe three key components. First one is the revenue. It is the blue bar right there. A consistent decline over the 3 years. And then the second one, the cost of revenue or cost of goods sold, illustrated with the orange bar, is a proportional decrease aligning with revenue. And then third one, profit before income tax, the green one, a sharp drop becoming negative in 2023. What is the key insights? First one, declining in revenue into 2021 until 2023. The company faced a declining revenue trend due to global factors, such as the lingering effects of COVID-19 pandemic in 2021 until 2022, and then a 35% decrease in global tin prices. Also, the geopolitical issues, including the Russia-Ukraine war. Then the last one, the weakened global demand in 2023. And then the next one, we will see the decrease in cost of goods sold. The decline in cost of goods sold mirrored the decrease in revenue, reflecting reduced production and operational scaling. And then the last one, the decrease in profit before tax, or earning before tax. A combination of lower revenue and fluctuating costs resulted in a drastic drop in profitability, culminating in a loss in 2023. So, to sum up, I would say that PT Antam Tbk faced significant financial challenges from 2021 to 2023, driven by external economics and geopolitical factors. This trend highlights the importance of resilience and adaptability in volatile global markets.
Next, let's move on to balance sheet. In analyzing the trend throughout the year right here, we're still using 2021 as our basis year with index amounted 100 as a basic index.
Okay, let's see the bar chart right here on this slide. It shows the trends in first the total assets, illustrated with the blue one, declined in 2022, then stabilized in 2023. Next one is the total liabilities, which is the orange one. It dropped significantly in 2022, but increased in 2023. And then the last one, total equity, which is the green one, peaked in 2022 before decreasing in 2023. So what is the insights that we can conclude from this chart? First one, the assets. The revenue declined from 2021 to 2023 caused by global factors such as the COVID-19 pandemic, reducing prices, the Russia-Ukraine conflict, and weakened demand negatively impact the company's assets. And what's wrong with the liabilities? A decrease in supplier liabilities in 2022 suggests improved short-term cash flow management or reduced procurement needs. However, liabilities rose in 2023 due to increased short-term banks borrowings. And then the last one, the component from the balance sheet, is equity. So the total equity experienced a decline from 2022 to 2023, reflecting financial challenges during the year. This may have been influenced by higher liabilities or adverse market conditions, weakening the company's equity position. So to sum up, I would say that PT Antam's balance sheet trends reflect the challenges of a fluctuating global environment. despite attempts to optimize liabilities in 2022, increased financial pressures in 2023, which impact both equity and overall financial stability. The last one is cash flow statement. In analyzing the trend throughout the year, we also use 2021 as our basis year with index amounted 100 as a basic index. Starting from the operating sections right here, the table and chart illustrate the decline in net cash flow from operating activities. In 2021, cash flows were at their highest level, and then in 2022, a significant drop is observed. By 2023, cash flows declined further, indicating financial strain. So, what is the cause of this declining net cash flow? The consistent decrease from 2021 to 2023 correlates with the operational losses reflected in the income statement. Lower revenue and increased financial challenges have directly impacted the company's ability to generate cash from core operations. And also, the contributing factors such as a 35% drop in global tin prices, the impact of the Russia and Ukraine war, and then the weakened global demand for commodities also affect the decreasing value of net cash flow. So what is the other operational challenges, such as decreased receipts from customers coupled with relatively stable or increasing payment to suppliers, employees, and for taxes have constrained cash flow. So in conclusion, the declining trend in operating cash flow, operating sections right here, underscores the financial pressures faced by PT Antam. This highlights the need for strategic interventions to improve cash generation and stabilize operations in a challenging market environment. Next one, let's move on to investing sections right here. The table here and the chart highlight the following trends. In 2021, relatively stable cash flows used in investing activities. In 2022, increased outflows due to significant investments in mining properties and related acquisitions. In 2023, a slight reduction in cash outflows compared to 2022, but still above 2021 levels, reflecting ongoing investment activities. So what are the insights we can conclude from this chart and graph? First one is the increase in fixed asset. The rise in cash flows or cash outflows in 2023 is attributed to a higher spending on fixed assets to support mining operations. This aligns with the company's downstream program and production capacity expansion. Next one is the mining property and investments. Significant cash outflows in 2022 were driven by the acquisition of mining properties and related investments, as I've mentioned before, which decreased in 2023 but remained a major expense. And then the last aspects or the last factors is receipts from dividend and fixed asset sales. In 2023, the company generated some cash inflows from the sales of fixed assets and dividends from investments, partially offsetting the outflows. So, in summary, the cash flows from investing activities show a pattern of strategic investment to support a long-term growth. While the cash outflows decreased in 2023, they remain substantial, reflecting the company's commitment to operational expansion and downstream initiatives. Next one is the financing section. Like the previous one, the table and chart here show the following trends. In 2021, financing activities were stable with significant inflows and outflows. In 2022, it saw an increase in cash outflows for financing, primarily driven by bond repayments and interest payments. In 2023, there was a notable increase in short-term borrowings, offsetting some outflows, resulting in a reduced net cash outflow compared to 2022. So what insights could we get? First one, related to increase in short-term borrowings. The rise in short-term debt in 2023 is reflected in higher proceeds from bank borrowings. This aligns with the increase in current liabilities on the balance sheet. And then the next one, related to repayments and interest payments. Payments related to bonds, lease liabilities, and interest remain significant in 2022 and 2023, contributing to the overall cash outflows. And then the next aspect is related to dividend payments. In 2022, significant dividends were paid, but this was reduced in 2023 as part of company's efforts to manage its cash flows. And what is the trend on net cash flows? While 2021 and 2022 showed considerable outflows due to financing repayments, the inflows from borrowing in 2023 helped mitigate the net cash used in its financing section or financing activities. So to sum up, the trends in financing activities reflects PT Antam's strategic use of short-term borrowings in 2023 to manage its cash outflows requirements while dealing with significant financial obligations. This underscores the importance of balancing debt financing with repayment strategies to ensure financial stability. Let's see each of these ratio results of PT Timah and evaluate its financial health performance. First one is activity ratio. The activity ratio provides insights into how efficiently a company is utilizing its assets and managing its operations. Let's break this down into key components from our analysis. First one is receivables turnover and day sales outstanding. Performance in this area appears strong and aligns well with the industry average. For instance, the average collection period in 2023 was 41 days and the turnover ratio was 8.9, indicating healthy cash flow to meet supplier payments. And then the second one is inventory turnover and days of inventory on hand. Inventory management is also on par with the industry. Similar to receivables, the inventory turnover ratio and the days of inventory indicate the company is effectively converting inventory into sales. And then the third one from this table is accounting payable turnover and number of days payable. The company is efficiently managing its payables. It performs faster than the competitors, optimizing working capital and swiftly converting assets like inventory into cash. And then the fourth one is receivables turnover and days of sales outstanding. First one is fixed asset turnover. This ratio was 2.5 in 2023, exceeding industry averages, showing effective use of fixed assets to generate revenue. And then the second one is total asset turnover. While acceptable, it slightly declined to 0.3 in 2023, reflecting some losses incurred by PT Timah that year. And then the next one is asset utilization. This declined to 0.65 but remains within an acceptable range compared to peers. And then the fifth one is the equity turnover. The equity turnover ratio was 1.3 in 2023, reflecting PT Timah's effective use of equity to generate revenue. So what is the conclusion in activity ratio? Overall, these metrics suggest the company is maintaining a competitive edge in managing its assets and liabilities efficiently. Let's move on with the liquidity ratio, which measures the company's ability to meet short-term obligations. Here, we compare PT Timah with the industry average and PT Antam here for 2022 and 2023. First one is the current ratio. In 2022, PT Timah performed strongly, exceeding the industry benchmark of 1.5. However, in 2023, the current ratio dropped below the benchmark, suggesting weaker liquidity and potential risks in meeting short-term obligations. And then the second one is the quick ratio. The quick ratio also declined from 0.96 in 2022 to 0.66 in 2023, indicating a growing reliance on inventory to cover short-term liabilities. This could present liquidity challenges. And then the third one is cash ratio. Despite a decline from 0.56 in 2022 to 0.44 in 2023, PT Timah's cash ratio remains above the industry average. However, the downward trend signals tightening cash reserves. So what is the conclusion in this category? In contrast, PT Antam outperformed PT Timah across all liquidity ratios in 2023, reflecting stronger financial stability. Let's now discuss the profitability ratios, which indicate how effectively PT Timah is generating profit from its operations. First one, we can see from the gross margin. The gross margin sharply declined, reflecting potential issues like rising production costs or falling selling prices. At 5.55% in 2023, it's far below the industry average of 30%, signaling significant inefficiencies in this category. And then the next one is operating profit margin. This margin fell from 11.05% in 2022 to minus 2.88% in 2023. The shift shows PT Timah moved from operational efficiency to operating losses, a concerning trend in this case. And then the next one, as we can see from this table, is pre-tax margin. The pre-tax margin dropped from 11.25% to minus 5.32%, highlighting financial pressures from rising costs and declining revenues. The signal inability to generate profit before taxes. And then the fourth one is net profit margin. It falls from 8.30% to minus 5.36%, indicating earnings have been eroded by non-operating expenses, such as interest and potential losses from non-core activities. And then the next one is return on common equity. This dropped drastically from 15.25% to minus 1.35%, showing that PT Timah failed to generate returns for shareholders in 2023. And then the sixth one is return on asset. This ratio declined from 4.91% to minus 2.31%, indicating the company is incurring losses instead of generating profits from its assets. And the seventh one is return on total capital. The decline from 7.6% to minus 1.24% highlights inefficiency in using invested capital, transitioning from profits to incurring losses. So what is the overall conclusion for this category? PT Timah experienced a steep decline across all profitability ratios, signaling significant issues in efficiency and profitability. Okay, next, let's discuss solvency ratios, which assess a company's long-term financial health and its ability to manage debt effectively. First one started from the debt to equity ratio. PT Timah's debt to equity ratio increased to 0.56 in 2023. While still within the acceptable industry range, higher debt level indicates a risk of financial strain if equity cannot cover obligations. The next one is similar to the first one, which is debt to asset ratio. This ratio rose to 0.27 in 2023, driven by asset sales and short-term bank loans. This increase signals higher dependency on debt financing. And the third one, related to the previous ratios, which is interest coverage ratio. The most concerning indicator is the interest coverage ratio, which severely deteriorated to minus 1.18 in 2023. This decline highlights the company's inability to cover interest expenses due to incurred losses and incurred borrowing costs. So overall, PT Timah solvency remains within industry averages. However, the company must address rising debt levels and avoid further losses to maintain financial stability. And then the last one is valuation ratio. So let's examine these ratios, focusing on earnings per share and the price to earnings ratio. First one, we will see through the earnings per share, or usually known as EPS. PT Timah's EPS dropped significantly from 140 in 2022 to minus 60 in 2023, reflecting substantial losses. This decline aligns with global challenges like the Russia and Ukraine conflicts, which disrupted export and import activities. And then the next one is the price to earnings ratio. It also turned negative minus 10.8 times in 2023, consistent with the EPS decline. In comparison, as we can see from this table, PT Antam managed to show a price-earning ratio increase to 13.3 times, suggesting market resilience despite similar external pressures. So, what is the conclusion for this category? The steep decline in valuation ratios reflect a loss of investor confidence and a significant deterioration in the company's value due to financial losses in 2023.
The 2023 Sustainability Report of PT Timah was prepared to illustrate the company's commitment to implementing environmental, social, and governance, or ESG practices. The company implements sustainability through 6 main pillars aligned with the Global Reporting Initiative, or GRI standard. These 6 pillars are as follows. The first one is its environmental and climate change pillar. This pillar focuses on managing the environmental impact of PT Timah operation, including conserving natural resources, reducing greenhouse gas emissions, and addressing climate change. It adheres to several GRI standards, such as GRI 302 on energy consumption and efficiency, GRI 303 on water effluence, GRI 305 on emission reduction, GRI 306 on waste management, and GRI 304 on biodiversity impact and post-mining reclamation. The steps taken by PT Timah in this pillar include: the first one is reducing greenhouse gas emission. PT Timah reduced 37,399 tons of carbon dioxide equivalent in 2023 through energy efficiency measure and environmentally friendly technology. The company is also pursuing a long-term decarbonization strategy to achieve carbon neutrality by 2060. And the second one is post-mining reclamation and land rehabilitation. Since 2015, PT Timah has rehabilitated 3,453 hectares of post-mining land, planting over 2 million trees and restoring ecosystem to support biodiversity. And the third is natural resource management and renewable energy use. PT Timah has shifted towards renewable energy and achieving 1.4 million gigajoule per year of renewable energy use in 2023. The company also improved hazardous waste management and reducing it by 81% compared to the previous year. And the last one is water management. PT Timah optimizes the use of water in the production process to minimize the consumption of water resources. In addition, wastewater from operational activity is managed accordance with the environmental standard to ensure it does not pollute surrounding water sources. The second pillar is smart operation and product governance pillar. This pillar emphasizes optimizing operation through advanced technologies and ensuring responsible governance of the company's product. It's aligned with the GRI 204 on local procurement and GRI 417 on customer health and safety. The steps taken by PT Timah in this pillar include the first one is utilizing smart technology and innovation. The company implement advanced technology such as the TSL Ausmelt furnace, which improving tin ore processing efficiency, reducing energy use, and enhancing product quality. The second one is the supply chain management. Collaborating with local suppliers to maintain a sustainable tin supply chain. In 2023, 372 billion of procurement spending went to local suppliers, supporting local economic development and positive social impact. The third one is responsible product governance. PT Timah ensure its product meet high quality standard through strict quality control and transparency across production process to meet sustainability focused market demand. The fourth is digitalization in operation. Digitizing operation system has enhanced efficiency in mining and processing activity while enabling better monitoring of environmental impacts. And then the third pillar is human resources pillar. This pillar focuses on employee welfare, skill development, and workplace safety. It complies with the GRI 401 on employment, GRI 403 on occupational health and safety, GRI 404 on training and education, GRI 405 on diversity and equality, GRI 406 on non-discrimination, GRI 408 on child labor, and GRI 409 on forced or compulsory labor. The steps taken by PT Timah in this pillar include the first one is occupational health and safety. In 2023, there were only 5 cases of lost time injury, over 14 million work hours, reflecting a strong commitment to workplace safety. The company also enhanced occupational health and safety training program to reduce accident risk. The second one is employee training and development. PT Timah offers various training programs to improve employee competence and productivity, preparing them to meet evolving industry challenges. The third is inclusion and diversity. The company promotes fair opportunities for all employees regardless of background, gender, or status through inclusive diversity policies. The fourth is employee well-being. The company takes employee physical and mental well-being seriously. It provides adequate healthcare facility, support for work-life balance, and enhanced benefit to improve workers' quality of life. The last one is human rights and worker protection. PT Timah respect human rights by prohibiting forced labor and child labor, and ensure workers' rights are protected throughout its operational activity. The fourth pillar is community development pillar. This pillar focuses on empowering communities, corporate social responsibility or CSR, and respecting the rights of local communities. This pillar aligns with the GRI 411 on rights of indigenous people and GRI 413 on local communities. The steps taken by PT Timah in this pillar include the first one is corporate social responsibility or CSR program. PT Timah allocate 31.8 billion rupiah to CSR initiative benefiting 48,135 recipients. This program span health, education, economic empowerment, and environmental conservation, including projects like mobile health services, mangrove planting, and educational support to children in the mining area. The second one is empowering micro, small, and medium enterprises, or MSME. PT Timah support the local economic empowerment by funding MSME, providing entrepreneurship training, and offering capital support for small business near its operational area. And the last one is respect for indigenous people's rights. The company ensures that its mining activity do not harm indigenous community, working with the local stakeholders to identify and manage risk affecting community near mining sites. And the fifth pillar is economic development pillar. This pillar emphasizes the PT Timah contribution to local and national economy and the economic empowerment of surrounding community. It aligns with the GRI 204 on local procurement and sustainability supply chains, and GRI 201 on economic performance. The steps taken by PT Timah in this pillar include the first one, PT Timah contribution to the national economy. PT Timah record operational revenue of 8.39 trillion rupiah in 2023 and contributing 1.05 trillion rupiah in taxes and distributing 312.5 billion rupiah in dividend, strengthening Indonesia's economy. The second one is local economic empowerment. Collaborating with local supplier, PT Timah allocated 372 billion rupiah for procurement in 2023. This initiative support local industry, create jobs, and strengthen economic in mining region. And the last one is infrastructure development and social initiative. The company invests in infrastructure projects supporting education, healthcare, and public facility, and benefiting surrounding community. The sixth pillar is its governance pillar. The governance pillar highlights the Timah commitment to transparency, accountability, and compliance with legal standard. This pillar aligns with GRI 202 on general disclosure and GRI 205 on anti-corruption. The steps taken by PT Timah in this pillar include: the first one is anti-corruption and legal compliance. PT Timah implements strict anti-corruption policies and whistleblowing system for reporting irregularities. The company complies with national and international regulation, including those related to clean trade and environmental management. And the second one is risk management. An enterprise risk management system is in place to identify, evaluate, and manage operational, financial, and reputational risks. And the third one is transparency and reporting. The sustainability report provides transparent information on financial, social, and environmental performance adhering to GRI standard. And the fourth is stakeholder management. PT Timah maintains strong stakeholder relationship through open dialogue to address concerns to its operation. And the last one is governance capacity building. The company enhances governance capability by offering training and leadership development program for management teams. PT Timah 2023 Sustainability Report described the company's effort to follow the principle of environmental, social, and governance, or ESG. Although the company claims to have followed the Global Reporting Initiative, or GRI standard, the issue of corruption and environmental damage revealed in 2024 indicate that the report does not fully reflect the reality on the ground. This indicates that there are problems with corporate governance. One of them is limited transparency, where the sustainability report does not adequately address the impact of illegal mining that occur outside of official permit and how this exacerbates environmental damage. Although land reclamation efforts are made, the long-term impact of damage caused by illegal mining may not have been accurately estimated. In addition, governance issues are also evident in PT Timah claims regarding anti-corruption policies and whistleblowing system. Although this program exists, they are ineffective in dealing with irregularities involving internal company officials. The corruption cases that have been revealed create the impression of manipulation in the presentation of sustainability reports, which should reflect more transparent and accountable corporate practice. This issue encourages the need for greater transparency in sustainability report and governance in the mining sector. To understand PT Timah risk, we need to look at the main challenges that the company faces, which fall into two main areas, is from financial performance and corporate culture and governance. From financial performance, PT Timah is dealing with the issue like fluctuation in prices, rising costs, and problem with liquidity. From corporate culture and governance, there have been cases of corruption and manipulation of financial report, showing weaknesses in how the company is managed and its business ethics. After understanding the challenges faced by PT Timah, we can assess its risk, which including the following. The first one is from liquidity risk. PT Timah has a very high liquidity risk due to large short-term debt. If the company fails to manage liquidity, it can cause overall operational failure. From investment risk, large investment funded by short-term debt increase the possibility of default if they do not generate expected profit, worsen liquidity problems, and damage investor confidence. From reputation risk, cases of corruption and financial statement manipulation have damaged public and investor confidence, which has major impact on stock value and financial support. Another risk that faced by PT Timah is fraud risk. Fraud in financial statement, if repeated, can cause large financial losses and further damage the company's reputation. From credit risk, large debt burdens and high interest rates increase the risk of default and cause further financial problems. For market risk, fluctuation in global tin prices can reduce the company's income and worsen financial condition. From cost of production or COGS risk, rising energy and logistic costs can reduce profit margin. And the last one, from supply chain risk, problems in the supply chain have the potential to increase costs and hinder the company's operation. To mitigate and manage this risk, PT Timah can take the following action. The first one, debt and liquidity management. The company can restructure debt to extend the company's maturity period so that the company does not experience the risk of default. In addition, the company must also implement a strict cash policy to ensure that sufficient funds are available to pay maturing debts. PT Timah can also strengthen internal control by conducting regular internal audit and supervision to detect fraud and manipulation of financial report as quickly as possible. Furthermore, PT Timah can carry out production cost control by conducting periodic cost of evaluation to achieve efficiency so that production cost can be reduced. And the last one, PT Timah can also carry out supply chain management by reduce dependence on only one source by building relationship with various suppliers. Useful information and good communication also need to be established so that everyone in the company can follow each rule. This can be done in the following ways. The first one is by producing relevant high-quality information. To produce relevant and high-quality information, the company must conduct regular data analysis to monitor the company's performance and detect various risks faced by the company. In addition, the company must also ensure that the financial reports are prepared properly in accordance with standards and are free from the risk of fraud or manipulation. And the second one is internal communication. The company must be able to explain the objective and responsibilities of each individual to support internal control so that each employee can maintain compliance and integration. In addition, the company must also be able to create open communication so that each employee can report problems without fear. And the last one is from communication to external party. To build relationship with external parties, the company must be able to be transparent in presenting financial report and disclose this report clearly and accurately, and ensure that there is no manipulation in the financial report. To ensure that internal control is implemented effectively, the company should carry out the following steps for monitoring. The first one is conducting regular audit. The company needs to conduct regular audit to ensure that internal control are running well and ensure that the company complies with policies and regulation. This is done by periodically examining the company's financial report. And the second one is performance monitoring. By making regular performance report as evaluation materials obtained through analysis of the company's performance, cash flow, and areas that have potential risk. And the last one is periodic risk assessment. By conducting risk assessment to estimate the possibility of risks that will occur and risks that have currently occurred and preparing mitigation.
We met to the last section, the key takeaways. This report highlights the financial performance of PT Timah Tbk in 2022 and 2023 using ratio and common size analysis. In 2023, PT Timah faced significant challenges, including a sharp decline in profitability, rising tail gas due to the energy price fluctuation, high logistic costs, the global tin market downturn, geopolitical tension, and falling tin prices. Despite asset management optimization effort, increased short-term debt and higher interest expense worsening the company's financial difficulties. Corruption revelation in 2024 added reputational risks, threatening public trust and future sales. To address these issues, PT Timah must implement strategic policies to stabilize its financial performance, tackle liquidity and profitability risks, and adapt to dynamic market conditions. So, that concludes our presentation for today. We, Group 12, would like to thank you for all your attention. Thank you and